They buy at the top and they sell at the bottom. And do you remember we used to call these people the masters of the universe? I mean, they're idiots.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Welcome to Live from the Vault. My name is Shane Moran, and I'll be your host for this episode. And from the entire Live from the Vault team worldwide, we want to thank you for your continued support. And as you can imagine, the community keeps growing more and more every single week, and there's a lot to talk about during these historic times. And Andrew Maguire is in the house with an industry expert by popular demand and a returning guest, Mr. Alasdair Macleod, and we'll be talking gold. This is going to be an amazing episode, and you won't want to miss a word right here on Live from the Vault. You know, Live from the Vault gives you access to information and updates that you just can't get anywhere else, and this episode will be no exception. So just before we go to Talking Gold with Andrew Maguire and our special guest, Alasdair Macleod, please help us spread the word about this channel by hitting that like button, by sharing, by subscribing if you haven't already done so, and click on that bell if you'd like to be notified in real time as these episodes go live. So with that, let me introduce our special guest. Alasdair Macleod is the head of research at Gold Money, and Alasdair's been a celebrated stockbroker and a member of the London Stock Exchange for decades, and his experience encompasses equity and bond markets and fund management, corporate finance, investment strategy, and his mission is to educate and inform the public in layman's terms what governments do with money and how to protect themselves from the consequences. And with that, let's head over to the UK with Talking Gold with the one and only Andrew Maguire and our special guest, Alasdair Macleod. Over to you, Andy.
Well, this is actually, I always look forward to Alasdair returning for a visit with us. And as you say, so many subscribers have actually been asking for Alasdair to return. And I really do thank you, Alasdair, for coming back to share just a snippet of the wealth of your experience. And I know you, I mean, not just the financial industry, you're a historian, and you have the unique ability to demystify really what is a very complex world of high finance. And as I say, so, but, you know, often when we come onto Live from Vault, we're trying to focus the area, our discussions on gold and silver and how all of these things impact gold and silver. And I know we could go in many directions, but of course, so many of these crosses do affect gold and silver anyway, so they're all relevant. But as we are recording this episode today, it's just before the Wednesday, the 21st FOMC meeting, so I want people to be aware that this is being recorded well before that. Not that is making much difference, but as we started our day this morning, Alasdair, it must have struck you the same way as it struck me. We evidenced the Russia-Ukraine situation, and I know you've done a lot of work on this, or shall I venture to say, my view is the proxy war between the US and Russia. Yeah. As we saw this sort of escalate, Alasdair, I know you've discussed this before, but what are your thoughts here? And it seems here in Europe, and us in the UK, for example, have really kind of shot ourselves in the foot by imposing self-harming sanctions on Russia. And good Lord, though, it sounds like they want to dig a deeper hole now. And as you recently put it, I think, very recently, grabbed my attention, a group thinking form of myopia has taken over. And as a result of this, what I think is a clown show, shows us peons as having to make choices to heat or eat. What are your thoughts?
Well, yeah, I mean, I'm afraid that our leaders have put us in that position, and they're pursuing the situation. To me, it is absolutely crazy. If let's say you were on the moon looking down on planet Earth, not influenced by all the propaganda from one side or the other, history would tell you that Russia has always wanted to secure her borders. She is effectively an introspective nation. Under communism, what was interesting was that everything that they did in terms of influence abroad and all the rest of it was to try and secure her own position. She was never interested in taking over the world in the way that you could argue that America has in terms of its hegemony. And given that that is the case, then Russia's primary interest has got to be to ensure that she's not threatened on her western boundary. She wants to trade with Europe, but Europe, unfortunately, is under the aegis, the sway of America. Britain has now left the EU, which makes the EU a more interesting trade unit as far as Russia is concerned. But what she wants to do basically is get the American influence out. And you could look at this on two levels. Firstly, there's the level of, missile launches and all the rest of it, which could attack Moscow or could attack deep into Russian territory. That goes against the understanding when the Iron Curtain fell down. And I think they are very much aggrieved by the American attitude ever since then. I think it also goes a bit further. Now that you have got Europe under the aegis of Brussels and Britain has got out, you have got an intensely European unit there, which, with all its faults and all the rest of it, can be a very, very good trade partner. So I think Russia is primarily interested in that sort of peaceful relationship. But in order to secure it, she saw the Syria mess that the Americans made. She saw the mess of Afghanistan leading to America leaving very recently. And she's seen Britain leave the EU. She has seen the election of President Biden, who is a far more quantifiable, weaker president than perhaps Trump, who was unpredictable, which is, and you can't really act against someone who's unpredictable. But if someone's predictable and they're basically weak, then you can make progress. So all these factors have come together, which have led to Ukraine being the proxy war, as you put it, and I think you put it absolutely correctly. But wars are never easy. The borders between Ukraine, Belarus, and the Soviet Union are, it's over 1,000 miles, for goodness sake. This is a huge, huge border. And it can't all be defended. Absolutely. It can be, strongholds can be identified. But what we have seen in recent weeks is that there's some success from the Ukrainian troops in terms of regaining territory. But bear in mind two things. First of all, you have got this enormously long border, and the Russians can't. No nation can protect it completely. Unless they put up a huge great wall or something, that is virtually impossible. And the second thing is that we're now beginning to enter the winter months when military campaigns basically grind to a halt. So I think what we're likely to see is not so much further wonderful gains by the Ukrainians, but this is going to turn into something like the Somme at its worst. Muddy, nasty conditions, troops in trenches, bedded down, making no progress, and lobbing the odd missile at each other. I think that's what it's going to deteriorate into. I don't think Putin minds, really. What he's now doing is he's now securing the position of Donetsk in particular, and any sort of Russians in the eastern Ukraine who want to be independent. They're having referenda to sort of see whether, for example, Donetsk has said it might join the Shanghai Cooperation Organization or BRICS. Now, this is a very major change in the whole thing, and it's bound to rile the West big time. And we've seen this in some of the responses from Biden, for example, at the UN today. So, we're looking at a situation where the West is trying to claim that the whole thing is being escalated. No, I think escalated is slightly the wrong word. I think what Putin is doing is he's trying to secure his position. But behind it all, what he is doing in conjunction with China is ruling Asia. Not ruling it in the sense of invading other people's territory, but allowing them to exist as independent nations within the context of the total Asian economy. And you've got this mixture of Russian commodities, energy, and so on and so forth, which are being offered cheaply. And you've also got Chinese technology and its investment in communications throughout Asia. Make no mistake, we are in decline while Asia is undergoing a continuing industrial revolution. And it is being financed by cheap energy. And guess what? We've turned around and said, we don't want fossil fuels. So even people like Saudi Arabia know who their friends are. And it's not us anymore. As far as they're concerned, the markets are actually Asia. And interestingly, I mean, back in 2014, I interviewed a director of one of the major Swiss refineries, and he was telling me that the refinery was being worked off its feet by Arabs. I mean, apart from the general market, conditions, Arab sources were sending in 400-ounce LBMA bars, some of them pretty ancient, covered in dust, dirt, and all the rest of it. And getting them re-refined into Chinese 4.9 standard. And then these bars were sent back to the owners. Now that tells me that even in 2014, some of the really big money in the Middle East was seeing the way in which the world was going. And so to that extent, to see stories that Saudi Arabia is sort of considering joining BRICS or whatever is actually a logical outcome of the geopolitics that's going on in Asia. That's actually what we're all missing in this, and I think that's terribly important to understand. Now, mentioning currencies, I think, is also very important because Putin is prepared to accept for energy, payments in energy and or other commodities, Turkish lira, Iranian rial, I mean, rubbish currencies. So why is he prepared to do this? Well, I think it sort of proves a point. He takes Indian rupees, which, the Indians are re-refining the oil and sending it off to America. Well done for them. He's taking these rubbish currencies. I don't think he's going to take it for very long. And the interesting thing is that the way in which to deal with this is to turn around and say, right, we will have a trade settlement currency to replace the dollar in all our transactions throughout Asia. Now, so far, we've had this talked about for the Euro-Asian Economic Union, which, is sort of the stans in the middle, Belarus and China and Russia, all coming together in that sort of central bloc, intensely Central Asian bloc. But it's going to be wider than that. And I think that the new Moscow standard, which was proposed and marketed as a response to the LBMA's kicking out the refiners, no, it's not that. It's actually, I think, central to the plan, which is being put together by the same man who is tasked with coming up with the Eurasian Economic Union new trade currency. Is being put together by Sergei Glaziev, the same guy. So we can see which way this is going. And if I was to make a prediction, I think that the direction in which Putin is taking this is that he will substitute these rubbish currencies, which at the moment he is prepared to take for his oil, energy and commodity exports, with a new trade currency, which will be based on gold. So these are extremely interesting times, Andrew, as far as the really big picture is concerned, anyway.
I mean, that is just so helpful because I think, again, I think you've nailed every single aspect of that, Alasdair. And I think, I remember back, I know I looked back at one of our previous interviews. That was back in July 2021. I remember asking you to comment on the Russian central bank selling dollar reserves and adding gold in its place. And in other words, openly swapping dollars for gold back then. And we noted back then there was clearly moving to set up a new payment system. to reduce dependence on the SWIFT interbank payment system. And of course, what you've just outlined is exactly, this is the connect the dots. And you're talking about really long-term thinking here, strategy. And this strategy has clearly been in place for quite some time. And let's face it, Russia and China are both military enemies of the US. Always have been, and yet they will trade with each other.
They've got completely different outlooks on everything. I mean, the situation was made considerably worse when President Trump decided to really go at China and isolate China from world trade as much as possible. I mean, we forget that until then, George Osborne and David Cameron were, happily developing good trading relations with China, and China, through Hong Kong, wanted to use London as its main international financial centre. I mean, brilliant stuff. But that was all kiboshed by President Trump, and we were then put in the position through the Five Eyes intelligence relationship of either going with America or going our own way. And the establishment certainly wouldn't have done anything other than fold and go with America. So we've lost that opportunity. In any event, the whole thing has changed. It has deteriorated. All the publicity about the very bad way in which the Chinese treat their citizens is now in everybody's mind, and that was a deliberate act to get people thinking that way. We can't really put the clock back in that sense. And it's a fascinating problem, I think, that the new Conservative government has under Liz Truss. Now, at the moment, she's all gung-ho, continuing as she was, the previous policy. And I am sure that as Foreign Secretary and now as Prime Minister, she will continue to be advised by the intelligence services, which are in hock to the Americans. We've got to continue to deny a role for China in world affairs, and also to continue to double down on helping the Ukrainians against the Russians in that proxy war. To my mind, these are wrong-headed policies. I mean, it's not showing the wisdom which we require of statesmen. And I was very interested in this context. Some time ago, Kissinger, who is now, 99 or something, he made the remark that really the best thing to do is to get the Ukrainians and Russians to talk together and, try and resolve this. Sooner or later, he said, we're going to have to talk. And I think he's absolutely right. But we're so far away from there, and we're still drifting apart. So we're not going to have a peaceful world at all. But I think I'm very, very hopeful that the one good thing that will come out of this is sound money from the Asian bloc. Because if they do that, then we will have no alternative but to follow them. We won't follow them immediately, but we will follow them in time. And I'd like to just make another point. I mean, I've always taken the view that for Russia and China to declare their true gold reserves would be rather like a financial nuclear weapon. We do know now, officially, that between the central bank's reserves and other Russian government accounts, they've got over 12,000 tons of gold. Now put that against America, which claims it's got 8,134 tons, yet to be verified. And you can see that the situation in terms of gold, which, remember, legally is money. Everything else is credit. That's the legal position, whatever the politicians say, whatever the economists say. Under those circumstances, you can see that legally it puts Russia in a more powerful position financially than America. The other thing I would say about the Russians is that their economic analysis is not bound up in the Keynesian fallacies, which we live with all the time. Our markets, are driven by it. Government policy is driven by it. Interest rate policy is driven by it, and it's all rubbish. they see through it, and you can see from the speeches, the very few speeches that Putin makes on the subject of the Western's economic and monetary policies, that he sees it, he understands it. And that tells me that this analysis, that they actually understand the role of gold as money, and this must be returned to at some stage, I think that's very important. The difference is that from being a nuclear option, I think what the Russians and Chinese are now seeing as a result of our actions is that they need to do it for defensive purposes rather than offensive purposes. And that's a major, major shift. So I'm very hopeful that we will get a return to some sort of sound money. I'm sure they'll make a hash of it. I don't trust any government to get these things right first time. But at least, you're looking at over half the world's population potentially in the SCO, EAEU and BRICS, mixture. Over half the world's population. We're only about 20% in NATO and our supporters. So the majority of the world could well move towards accepting gold as money and the backing for their currencies. And that, I think, is desperately important.
And Alasdair, as you quite rightly say, you've made so many good points there. Gold has never ceased to be money. It's just that the fact that I guess we have been gaslighted, or as a country, as a global community, to thinking then there's only one solution, which is fiat money, which you can print to any amount you wish. And I think what is so interesting here is that first of all, you've mentioned how Putin is really strategically playing this very, very well. And do you know what? What I really like about our conversation here is that you're intelligently disintermediating the narrative, the one narrative that is everywhere, and questioning it. This is about education and for people to make up their own minds. And really, what you've just outlined is so correct. It's so true. And I think you've talked about several things here. For a start off, you're quite right. Putin, what was it? The weather defeated Napoleon. The weather defeated every army that's ever attempted to take on Russia. It's ludicrous to even...
Including Hitler.
Yeah, that's what I mean, Hitler. So yeah. with his massive machine, it's even ludicrous to think that there isn't going to have to be some for either everything is in ruins and we all die, or basically a negotiated settlement has to come out of this. And I think one of the things that really made me very, very angry was that back in April, it was absolutely clear from every side that Russia and Ukraine were ready to do a deal, to actually settle. And then what happened? We had Boris Johnson race over there and within 2 days, completely unwound, called Putin a war criminal. And what was Boris doing? One of his, obviously he's towing the American line, but on the other hand, he was also looking to seek cover for his Partygate issues, and it's just all timed perfectly. And I think what is criminal is the amount of thousands of people that have died on both sides, I'm not taking any sides here, on both sides, because it was actually, they actually stopped, or he was primarily the figurehead for stopping that negotiated settlement. And really, I'd say blood on hands here for that was totally unnecessary.
Well, I think actually what Boris was doing was he was promoting the line. We've always been the Americans' puppets, and I think that he was just doing exactly the same thing. So, but you're right. We're moving away from a negotiated settlement, and this could deteriorate into something far nastier. I just hope that some sort of reason prevails at the end of the day, even though they might not move towards a settlement. But I mean, meanwhile, Europe is hurting. I think from the energy point of view, they've managed to get a remarkable amount of gas in storage, by all accounts. They haven't really been that dependent on Russian oil. But once we get through the winter, we've then got the spring. And there is no doubt that with Nord Stream 1 now shut down as well, they will be drawing down on gas reserves in particular, which basically means that they've got to restock. And I don't think it's going to be quite so easy to restock in the spring. And the other problem, which I think quite a lot of commentators who are sort of taking a very positive line on energy costs, saying, well, this is a sort of temporary thing and all the rest of it, they're ignoring the problems with electricity. I mean, in this country, we've really screwed up our electricity strategy. And I understand that we're actually looking to France to supply electricity to us this winter to make up for the shortfalls. But France has roughly half its nuclear capability offline at the moment. I mean, a lot of it for genuine maintenance, but some of it because there are cracks in, in the reactors, in the concrete. Others are suspected of having cracks in the concrete. And France is expecting to import electricity from us. What? I think that's where the energy crisis in Europe is going to be. It is going to be in electricity. And if we have this wonderful weather much more, then the windmills won't be turning much. The ones at sea won't be turning much. And it will be sort of dark for much of the day. So, this is not a good time, I think, for our electricity production strategy. I mean, at least I think this new government has got a far better grasp of the situation and will move very quickly. I mean, encouraging fracking and so on and so forth. But as they say, Rome wasn't built in a day. So I think we're still going to have a lot of difficulty this winter. And on top of that, of course, there is the food position. I mean, already I was absolutely staggered. I mean, for a long time, I've been paying something like £2 a block for Lurpak butter. And I saw the other day it's priced at £2.65. Where did that come from? It just jumped. But it's not just butter that's doing this. It's all sorts of food products. And agriculture is it's energy intensive. And a lot of those costs, those higher energy costs, are not going to be paid for by government subsidy. It's going to be extremely difficult, plus the lack of fertilizer and all the rest of it because of the Ukraine situation. I mean, we've got a lot of problems to work through. And the point about inflation is that these are not the causes of inflation. What causes inflation is printing the currency to pay for the higher prices. That's what does it. And of course, this is going to be the next wave of currency inflation as Europe, as Britain, and I suppose to a lesser extent America, deal with this energy crisis. And then we've got a further problem, Andrew, and that is that banks, quite understandably, see this risky situation, and their balance sheets are very, very highly leveraged. I mean, I reckon that the GSIBs in both Japan and also in Europe are over 20 times leveraged on average. And some of that, we're looking at sort of going up to 27, 30 times. Now, this is unheard of. It's the consequence of negative interest rates. Because the margins just go down, 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 down. How do you maintain your profits? Well, you just gear your balance sheet. But that's fine until it gets to a point where suddenly the music stops. The music has stopped now. And bankers are reversing their earlier credit expansion policies. I mean, I was fascinated to see a headline in the Wall Street Journal the other day, which said banks have lost 370 billion in deposits. Well, yeah, I mean, the figure might be right. But what actually happened is the banks didn't lose it. No, what they did was they contracted their balance sheets. They reduced their loans and they reduced the deposits. In total, down 370 billion. This is evidence of what is going on. Now, this matters because what is GDP? GDP is the sum total of transactions, qualifying transactions, financed by, guess what? Bank credit. Nothing else. I mean, there are a few cash transactions, but less and less so. So if you contract bank credit, then you're going to contract GDP, nominal GDP. That's what we're now seeing. And because there is so much more bank credit contraction to come, the slump, and that's what it is, we must not mince words over this, the slump is going to be extremely serious. How do the central banks respond to this? Well, the answer basically is that government deficits will shoot up. They will finance it in the bond markets. They will have to reverse quantitative tightening into quantitative easing, and then we will see the currencies begin to collapse. Ergo, you've got to earn gold, because that is your escape route from what is actually happening. It's as simple as that.
That arrives beautifully at gold, and you're absolutely right. That's the anchor for this, and I think, you know, if you've mentioned the SEO a couple of times. I mean, what we're talking about, what, 3 billion Euro-Asians here? I mean, isn't that like half of the world's population here? I mean, really, this side of the world is absolutely blinkered to what's really going on. And as you say, you are seeing the results of it. You're seeing in some of the stuff you're talking about here with the banks, etc., waking up to this. I mean, also it staggers me because really these are self-inflicted wounds on ourselves, because what we've done is issue these sanctions against Russia, which are actually bolstering, as you've just alluded to, bolstering the ruble to probably the strongest currency on the planet. Their GDP is relative to the West here is actually looking extremely strong, and the contraction is, and you probably know the number. I don't know the number, but it's a hell of a lot less than us. And I think you kind of suddenly I think this cannot be. These are intelligent people. It must be. There must be some aspect to this where the US also has the additional benefit of bankrupting Europe.
Well, I don't think they get any benefit out of doing that. It's an interesting question because so many people come up with conspiracy theories, you know, about how, you know, the World Economic Forum and you know, I mean, and some of them are absolutely crazy. I think a lot of this is the action of governments, civil servants, bureaucracies, politicians, who quite frankly are lost and getting increasingly frightened. I mean, in America, there has long been a tradition, that's not quite the right word, whereby, you know, you say something really scurrilous and you find the FBI comes knocking on your door. That's the way it works in America. And of course, this is a surveillance state, which is you know, it's George Orwell all over again. And in this country, in the UK, we would be very sensitive to that. But when you get this paranoia in the intelligence services and the domestic intelligence services, you can see that this can rapidly develop into complete loss of freedom. And we have got very serious people like Carstens at the Bank of International Settlements, you know, trumpeting the merits of CBDCs, saying that, you know, we will be able to control how they are spent, and we know who spends it, where they spend it, when they spend it. We get all that information through CBDCs. It will allow us to manage the economy. Hold on a minute. They're just trying to take us over. That's actually what it is. So you can see how you have got people in authority who are finding that they're pulling the levers of power and nothing's working. You know, you pull the lever, nothing works. I mean, in this country, we've got a National Health Service. You chuck another 100 million into it, or billion even, and what, you know, you pull the levers, how much of it gets down to the patients? You know, just a drip or two, that's all. The rest of it just gets lost in the system. So nothing is working anymore. And this is very, very concerning. And this is why I think that we're getting all these conspiracy theories, because the actions of people who find that the system no longer works are essentially sort of not far short of panic. And I think that's what we're seeing. So when it comes to, whether the Americans want to lean on Europe and stop them from growing and all the rest of it, I don't think that's the case. I mean, their actions might suggest that is the case. But I think they're just lost. I think they're completely lost. And the only person who seems to me is not lost in all this is Putin. He knows what he's doing. We don't. We've just lost the plot completely. And the consequences of losing the plot are basically, I think, that markets will take over the pricing of everything in the not too distant future. Now, whether that's triggered by Eurozone banks collapsing, which I think is very much on the cards at some stage. The Eurozone collapsing, I think that's almost a dead cert, with the German engine at the centre of it failing under these circumstances. And, look at sterling. I mean, sterling's going down the pan. I mean, I was looking at currencies. They're all falling into new low ground. Chinese yuan, Japanese yen, sterling, and also the euro. And, the strength in the dollar is just illusory. It's not strength in the dollar at all. All it is falling, other currencies falling faster than the dollar. And sooner or later, people will realize this. And I'm sorry, I'm ranting a bit, but, moving on from there and sort of, focusing a little more on gold, it just amazes me that hedge funds, if you look at their track record dealing in the gold market or the gold paper futures, whatever market, they buy at the top and they sell at the bottom. And do you remember we used to call these people the masters of the universe? I mean, they're idiots. They are, quite honestly, they're complete idiots. But, the way these markets... Sorry, Andy. The way these markets...
No, I say, you're right, but because they're trading paper gold.
Yeah. But, the only way in which they succeed is they are so big that they move the markets in their direction. They haven't a clue what they're doing. They really haven't. And sooner or later, they come unstuck. And, I'm sure you found the same thing, talking to various people around the world in the, in the sort of the retail trade, as it were, selling bars, coins, and so on and so forth. They've never been busier. And that gives me great hope, because the ordinary person has got a greater grasp of what's going on than these bloody hedge fund managers. I mean, they really have. So we've got a situation where people, I think, are beginning to cover themselves in this very risky situation, whereas the establishment still doesn't get it. It's an extraordinary situation. Normally it's the other way around. You follow the establishment in order to make money, but it's going to be their undoing. Markets will come back and take over pricing. And, look at the gap between the loss of purchasing power of currencies and interest rates. I mean, by the time you take into account that increased risk and all the rest of it, interest rates are at least less than a third of where they should be. I mean, they should increase by multiples, not by 0.75% as we're, or 0.1%, which we're hanging our hats on this afternoon. I mean, that's complete nonsense. This is a major, major mispricing the whole way across the global financial system. And it's going to crack. And when it cracks, it will crack big.
And from the physical market perspective, we've been talking a lot about gold as money. And of course, we're talking physical gold as money, as is Russia, China, and really what in the West, we tend to think of, or the price of gold is often set in the paper markets. It has very little relevance to what's really going on. In fact, as you know, we look at a fix at the London gold fix, we see 3 to 5 tons being squared. I mean, come on. I mean, we know there's far more being traded outside of local London than this siloed little club that decides what they're going to fix the price at for relative derivative reasons. But outside that, there's a whole physical market. And I think what we're talking about here with all of the stuff we're talking about also, we're talking about SEO, you're talking about various markets that are physical markets. And it's, to me, I see it every day. Our liquidity providers talk about it every day. The physical, the paper market liquidity is evaporating bit by bit. We see it a bit in the COMEX. We only see half of not even a quarter of the picture. The physical markets are being settled elsewhere at its own price. And it's increasingly going to do so. And I think this is why it's such an opportunity for people to buy physical gold, physical silver at these ludicrous prices. As you say, the hedge funds have, we call them speculators, but I mean, they are partly, mostly that's the problem. They are speculators. They're in, they're out. They've been led by the nose by the insiders, the house, to do certain things. When the dollar rises, tick for tick sell. So, and I think the other thing is dealing with somebody quite recently who said, yes, Andrew, yes, I'm thinking about investing my money into gold, but it's so bloody volatile. And I said, hang on, pull up a chart. And now we look at a chart and we say, okay, let's go back. You look at the dollar index. And at that time, it had just made 110. So, okay, so that's 20-year highs. Now look where the price of gold was. In dollars, $315. In pounds, 250 in round numbers. So where's the volatility? And it's suddenly you look and realize. And so I guess my question is, just because the dollar's rising, as you say, because of the reason is you've given the correct reason, it's just the best of a bad lot. It's quite possible for gold to rise alongside the dollar, is it not?
Well, actually, it's very interesting you say that, because, I mean, it's obviously true, yes. But this morning, I think for the first time in a long time, we saw that. The currencies opened, against the dollar. I mean, they fell quite heavily and the trade weighted was up at a record again. And what happened? Gold was up $13, $14. Not very important in the whole scheme of things, but you can see that perhaps a few people are beginning to latch on to the idea that, hold on a minute, these currencies being destabilized isn't good for any of them, let alone the dollar, and perhaps we ought to be looking at something else. As to your point about where volatility is, my colleague James Turk produced a wonderful chart of the price of oil from 1950 in various currencies and also in gold between 1950 and today. And, the gold price is just a sort of line like that. And I can tell you that from 1950, when oil was priced at, I think it was something like $2.69 or something a barrel, today the price in gold has fallen by roughly 25%. But you look at the volatility. The volatility in sterling is way off. I mean, it's just incredible. And also the dollar, to a lesser extent, euro, but the euro only really started in the year 2000. So, but you can see that the volatility is in the currencies. But hold on a minute. The idea of a currency or a medium of exchange is that when you do a transaction, you and I will agree what a pound is, but we might argue about what we're buying. I mean, if I'm buying, I don't know, something like an antique table off you or something like that, we're going to haggle around the price of the antique table. We're not going to haggle over the value of the currency. But actually, when you look at the commodities, we should be haggling over the currency, not the commodities. I mean, it is...
Good point.
It's an upside down world we live in, and it's being created by, if you like, trying to escape from the discipline of sound money. And this is crazy. It is completely crazy. But this is why the thing that's interesting is that when I was looking at this new trade settlement currency and the statements that Sergei Glaziev has given, he was talking about it being comprised of a mixture of local currencies and the commodities that the nations trade with each other. But I mean, that's got to be rubbish. It's got to be rubbish, because at the same time he said that this should be open to other nations to participate in. Well, that means that every time every time someone else joins, you have to rebalance the damn thing, and you'd never get anyone to agree to the composition in a committee anyway. So that is absolute rubbish. And you can see that if you say, okay, well, let's just take out the currencies, let's just look at groups of commodities and raw materials, and we take, say, base metals, we take precious metals, we take agricultural products of a non-cyclical type, don't depend on harvest, the cycle of harvest and stuff, and we take various other, sort of, if you like, raw materials, like lumber and so on and so forth. And you put them all together in an index, you can see it's sort of replicating what gold does. So why not just base the new currency on the gold price? I mean, they could do it, I think, without actually having to put any gold into it, by just merely fixing it on a daily basis against the price of gold. Participating currencies against the price of gold. There's your trade currency. I mean, it's actually very, very simple. But I think that the thing which I think is interesting about this is that once you find that nations are settling their overseas trade in sound money, in real money, if you like, or something which is tied to real money, then I think it's less of a difficult step for them to accept the attachment of their own domestic currencies to the gold price. And it's that really does give me great, great hope that this will work. But I think, as we've sort of discussed, I mean, there are so many aspects where, the West is going to try and stop this working. We don't want to see it. I mean, the Americans don't want to see gold come back, replacing the dollar. They're fighting it tooth and nail. And we can expect, I mean, I wouldn't be surprised as the situation deteriorates if you find more attempts to confiscate gold. It's crazy. It's absolute nonsense. But when politicians are desperate, they are nonsensical. I'm afraid it's as simple as that. But given that, I'd like to just put a mention in where I see silver, because the one thing they won't confiscate is silver. And that as a commodity is wildly underpriced. I mean, you can't expect to see lithium go up 10 times and silver fall 20%. I mean, it's just complete nonsense. So from the industrial point of view, it makes an awful lot of sense, I think, to accumulate silver. But also, if we as, sort of peons are denied legal money in the form of gold, then we fall back on silver. And interestingly, I mean, we know that at the time of Sir Isaac Newton, the relationship was fixed at around about, I think it was 15.5 ounces of silver to 1 of gold. But if you go back to Roman times, go back to Diocletian, in his Edict of Prices, he fixed the rate at 6 ounces of silver to 1 of gold. Which is interesting. And where are we at the moment? We're 80 something. I haven't looked at it in the last few days, but that actually is, if you're looking at the gold price as a performance, if you like, in other words, as an investment, then that has probably got more potential for you. But I would not look at it like that. I think we just want to get out of risk. And risk is fiat currencies, fiat-related assets, everything priced in fiat, and assets which you cannot price in the absence of fiat, without fiat actually being converted into proper money substitutes. So I think some silver in there would make an awful lot of sense as an insurance against the stupidity of the system when it tries to hold on to its power by taking yet more power from us and denying us the use of money.
Yeah, and we have that ludicrous situation. I just did an episode about this, and in fact, I did an episode of it 2 weeks ago, where we actually saw, and I've never seen this before, Alasdair, ever before, where we see a 20-cent backwardation, i.e. $1,000 difference per contract between the COMEX silver price as set on the COMEX versus what's being set in the spot market in the over-the-counter markets. And this arbitrage situation lasted for a full week before they finally squared it up today. In fact, we did an episode asking for sharks to come in the water and to come and feed on this risk-free arbitrage, you simply had to buy the COMEX silver contract and go and sell it immediately in the spot market for cash and make $1,000. And then it went down to 700, 600, 500, 400. We got to zero. However, there's still a contango that should be in place because of the carry costs. It should be somewhere at least 10 to 18, maybe even 26 cents is where the historical norm would be. So what you've just illustrated is silver is so underpriced. And to see a situation like that, where we get that much of a break in between the physical and the paper price, silver's a beautiful thing because what it does is give us visibility into the much more opaque gold market, which is much more difficult to see the footprints, but you can't ignore that. And I think I kind of wanted to say to you, in fact, I was going to ask you, so what do you think about silver? Well, you've just answered that. You've answered what think about silver. But I was going to also ask you if you have any comments on that. But what percentage, as a physical owner, and if someone said to you, "Oh, Alasdair, I'm having a cup of tea with you," what would you think? What should I? I'm going out to. I've got 100 grand, or I've got £1,000 or whatever. What percentage of gold or silver physical gold and silver should I buy? What would you say?
I mean, I think one thing I would say is that the whole point of physical gold and silver is that you are getting out of the fiat currency system. You are not, and eventually, when the fiat currency system collapses, which I think is getting closer and closer, and more and more people are beginning to understand that this is a real possibility, you will spend it. I would have thought, therefore, on the basis that silver has a lot of catching up to do compared with gold, but silver will never be fixed. Because the only escape route from this is that eventually these fiat currencies will have to be fixed against gold. I don't know what it would be in dollars. I mean, sterling, I can easily imagine £1 million an ounce. I mean, that's not meant to be a statement of a profitable opportunity buying gold. It's actually a statement of the collapse of sterling as a currency. I don't know where it would happen, but they need to do that in order to distribute, if you like, a money substitute, a gold substitute across the nation. I mean, we had this after the war with Hong Kong. When we reclaimed Hong Kong, we walked in there and there was the military yen, which was completely collapsed in value. What they did was that they introduced the new Hong Kong dollar, which was on a currency board basis, and they swapped it and the ratio of 5,000 to 1. Not because there was any value in the Japanese military yen, but because they needed to get it distributed throughout the economy. That, I think, is what eventually will happen. How long we'll take to get there, I don't know. But it will be gold, I think, which will be the metal which will be fixed against turning the paper currency into a money substitute. So taking that into account, I would think that I wouldn't have a majority of my physical gold and silver in silver, but I would probably have something like 30 to 40%. I think that would make sense because that would maximize your resources, I think, in the interim period when you will find there is a catch-up. I mean, we all know that when the price of gold goes up and it takes silver with it, silver tends to move up twice as fast as gold or slightly less than twice as fast as gold. So that, in fiat money terms, would be a very good starting point, probably to switch later on back into gold when, say, the ratios drop to something like 30 to 1 or something like that, or something which will enhance your the gold in your possession, the physical gold in your possession, compared with your starting point.
A hell of a lot easier to barter a 1 ounce of silver when the prices get much higher than an ounce of gold, which would maybe of extreme And when you say value, of course, you've just explained it's relative to fiat currencies. It's a pointless comparison, but it is what this is paid for, no counterparty risk. All the energy that created it is in it, and therefore it'll have enormous buying power. And silver would be much more exchangeable, in my view, than the equivalent amount of gold. So I think it's the same advice I would give to people. Look, is get as much of your money into gold and silver, physical gold and silver, but obviously you need to pay your bills. You need to have something. And so I would view silver in the same way, that'll be your spending money at some point.
I think you make a very good point there. And the other thing which I think is terribly important is that your family and your close friends around you will not have taken this course of action, and they will need help. And silver will be, I think, more useful in that context than gold necessarily. I would see gold as being, if you like, very useful for, if you like, doing capital transactions. I mean, going back to an earlier situation in Germany in 1923, I've said this so many times, so I'm repeating myself in a way, but you could have bought a really posh house in Berlin in late 1923 for 5 ounces of gold. It was $100, which is just slightly less than 5 ounces of gold at 20.67 to the ounce, which was the conversion rate then. And that's what happens in this. I mean, before the First World War, that house might have been, say, something like 500,000 marks, or even less, probably, because it would have been gold marks then. But in 1923, it might have been several billion marks, but it was only $100, 100 gold-backed dollars. So that's what happens to asset prices. And I would think that the canny thing to do is to expect that opportunity to come up again, where you can actually buy physical assets with gold and silver. You probably, depending on the jurisdiction, you probably have to have it in something which is legal tender. So in the UK, you would do it with sovereigns, for example. Or you might do it with, those 1 ounce gold coins, which are actually legal tender. They're marked as £100. So, so I think that's the way I'd look at it. I mean, really, gold is going to be very, very useful for those capital transactions in particular. Where you want to buy a farm or something, it probably won't take an awful lot of gold coins to do it. But silver, you're absolutely right, as a small change, and probably not such small change, silver is extremely useful.
Alasdair, I can't believe it. I mean, we've gone way past it. Gone past an hour here. I can't. It seemed like 2 minutes. Look, I just want to thank you so much. And we've taken you out of your lovely Devon air and put you in an office to come and talk to us. Thank you so much for sharing your sage advice and educational information here. This is information so people can listen and make up their own mind. And I think we're all enriched by what you've told us today. But thank you so much. I wish we had more time even, but thank you so much for spending that valuable time with us today. Thank you, Alasdair.
Well, you've been very kind to me in that, but I thoroughly enjoyed it. So we'll do it again soon. Let's do that.
And lunch is still on me. You know that.
If I can get round to you, I'll have to come into one of your polo matches, I think.
Yes, do that. Come and join us.
No, I have a bumper of champagne.
Well, you're invited to the one in May. Okay.
Lovely. Okay, then. Lovely talking to you again, Andy.
Thank you so much, Alasdair. Thank you.
Thank you, Andrew Maguire and Alasdair Macleod, for another fascinating discussion here on Live from the Vault. And remember, buy physical, and understand the difference between what Andy affectionately calls the casino, paper, gold, and silver markets, and the actual physical gold and silver markets. They're not the same. Don't be fooled. And there you have it, ladies and gentlemen, and the community as we keep growing. That's all we have for you today on another episode of Live from the Vault. But please keep spreading the word about this channel by hitting that like button. It really helps the channel, by sharing with everybody you know, and by subscribing. Now, if you click on that bell, you'd be notified in real time as each episode goes live. You don't want to miss it. And with that, we'll see you next time right here on Live from the Vault. See you then.